Ladies and gentlemen, this is Christopher Aaron. It is March 6, 2019. Thank you for being back. We are going to get back to looking at gold and silver in this video update. And I want to just ask you a question. If you are going to buy a car, who do you listen to for advice on that car? Do you listen to the car salesman, or do you listen to an independent source, perhaps a car and driver, perhaps another review, someone who you know who has driven that car? Let's think about another scenario. If you're going to buy a house, do you trust the seller of that house to show you and tell you everything that you need to know about that house? Or do you hire an independent inspection agent to go over that house and to look at the things that perhaps you don't know about, because your job is not to evaluate houses. Your job, hopefully, is to live in that house happily ever after. So what do you do? So the point I'm trying to make here is that my job here on this channel is as an independent voice on precious metals analysis. So I just want to challenge you to go back and think about that, whether it's a car, whether it's a house, whether it's your life investment in precious metals. Who are you listening to for your analysis? Who is guiding your decisions? Okay, no one can tell you what to do. You're a sovereign individual. You're a child of God on this planet. But what is it that you're going to listen to make your decisions? So I'm here to provide an independent perspective. The I before I Gold Advisor and our new service, I Global Analytics. This I actually stands for something. It stands for the word independent. So it's Independent Gold Advisor and Independent Global Analytics. That is what it is. We take no funds, no fees from anyone. Simply here to look out for your best interest. That is my entire business model. We look at gold. We are about $50 lower on the price of gold than where we were this time 3 weeks ago. Keep that in mind. I think there is a lot more downside coming for the price of gold. This is going to get pretty ugly, if you ask me. Let's look at silver. We are about $1.90 or so less on the price of silver than we were just 3 weeks ago when we were having this conversation. Okay, there's a reason why we look at these technical signals. So let's update it. What was I talking about 3 weeks ago? I was talking about the negative divergence, the negative signal between the companies that pull gold out of the ground, the senior gold miners index, and the price of gold itself from the beginning of 2016 through the present. And let's update this. Now, we were looking at this top, potential for a top a few weeks ago. Where are we now? After we've seen the $50 decline. Is this the end? Could there be more downside coming? Trust me, my business will do better when the metals are rising, because what happens is when metals are going higher, more people are interested, and then more people contact me, and more people watch videos and everything like that. So trust me, I wish I could say that the metals were going to be moving higher in my assessment. That is not what I see, and I'm trying to get people to protect themselves right now. So there's this question. It depends on what sort of situation you are in. Are you someone who is going to be buying a little bit of gold and a little bit of silver every month or every few weeks for the next 10 years, and you simply don't care what happens to the price? Well, then all the best to you, and keep doing that. There's nothing wrong with that strategy. You may be right one day, but I would just say the risk in that strategy is that it doesn't take 1 or 2 years for the price to start moving higher. It maybe takes 10 or 20 years, like what happened in the 1980s. So I don't see very many people bringing these negative scenarios to you, bringing the counterweight to the salesman, to the precious metals salesman. So I am doing that. And mind you, I own a lot of physical gold, a lot of physical silver. So do my family members. Okay, so I am aligned with this sector, but I've taken on a role of speaking independently because I don't see anyone else doing that who's bringing up the actual evidence. So let's look at this once again. Is this $50 decline enough? Have we seen the correction and now gold's ready to have that skyrocketing type of move? I don't think so. Here's why. We look at where the gold miners are at this exact same moment in time. This is shown on the top. The price of gold is shown on the bottom. We look at the gold miners. Where does this green band go all the way back to? Notice the gold miners are at the same level here at this 162 price, 162 on the gold miners index, that they were all the way back in December 2016. So December 2016, where was the price of gold? It was down here at the low 1100s level. About $150, $160 less than where it was today. So once again, we draw the lines in. We just look at data. This is what we're doing. And if you're someone who wants to just continue buying because you have no need for the money anytime soon, that's fine. But then you really don't have, if you're going to tell me, well, I'm just going to keep buying, that's fine. But give me an opinion on this. Look at the data and tell me, do you see something right with the data? Do you see something wrong with the data? I'm showing you the data right here. I have your best interest in mind. So if you're someone, we get a lot of these people at our firm here. We get individuals who have, anywhere between $20,000 and let's say $1 million to invest, and they're getting ready to make large purchases in the metals. Let's say next month or within the next few months, and they come to us and they say, should we buy it now? Should we go all in now, or what is the timeline that we're looking at here? And this is what we do. I simply try to advise individuals on that as to the sum of the available data that we have. And right now, the available data shows that this decline that we've seen, the $50 decline or so, still has a lot further to go before these two components, the companies that dig gold out of the ground and the gold itself, there is still a lot of decline left in gold itself before these two things get matched up properly. So there is a risk of a decline. And again, I would say, think about who you are as an investor. I'm never trying to come on the air and say everyone should do one thing, because everyone is in a different situation. You know that. I can tell you what we are doing here, what I am doing with my firm's capital. And that is what I do in the premium service. That is what I do in individual voice and email consultations. I talk to individuals about what we are doing here and how we can apply that to your situation, depending on your situation. There is a premium service, as I mentioned, that talks about all these things in much more depth, and we go over all the signals. Now, you've seen one signal here in this video. I think this is one of the most important signals, quite frankly. I have never seen the signal be wrong. I've been studying this market for 15 years now. I have never seen this signal be wrong. If this signal is going to be wrong, I would rejoice and I would be extremely happy, because then the metals move higher and then more people become interested. But I am more interested in telling you what are the signals that I am seeing, not just what do I hope is going to happen. So if you want to align with the 4 or 5 other signals that we talk about, including gold, silver, the GDX, the gold miners, the exact gold miners we are investing in here, we cover the US dollar, we cover the stock market and the US bond market. That is all available in Precious Metals Intelligence. That is the premium service that I talk about here. There is going to be a flash update coming. I anticipate this will be coming up within the next 1 to 2 weeks. We are going to take defensive positions in gold and most likely in silver. I will tell you this. And these are called short positions. And if you don't know what I'm talking about, this is a position in the paper market where we are going to profit if gold continues to fall. and we are going to offset the losses, because I do not recommend, if you're sitting on a lot of physical gold or silver, I do not necessarily recommend selling the physical metal and trying to buy it back, maybe 10 or 20% lower. I don't recommend that because the transaction costs can be so high. Those fees you have to pay each way, the premium over spot, all of those things, shipping costs, storage costs. But there is another way to do that. We could do that either through futures or ETFs or options. So if you're interested in protecting yourself and you want to know exactly when we are going to be doing that over the next several weeks, and then when we close the protection, that will be in the Precious Metals Intelligence service. There is a new service coming out shortly. It's coming soon. It's going to cover other commodities such as oil, natural gas, platinum, palladium. You can find the link for that below to sign up for a free notification. Make sure to hit subscribe if you're new to these videos. If you want to see everything that comes out on this free YouTube channel, hit subscribe and you will know. I also want to thank the supporters of this free channel. You are on Patreon. You know who you are. And my heart says thank you, because you're showing your appreciation for the free content on here. It means a heck of a lot to me. Once again, so we continue to see, what I'm saying is we continue to notice this negative divergence between the gold miners and gold. And it has not gotten better. We were talking about this 3 weeks ago. The divergence, okay? It led to a $50 decline in gold over the last 3 weeks, and that divergence has not improved. So, how much more decline in gold is going to come? When do you take the protective action? Do you take it before gold falls, or do you take it after gold falls?